Hey traders from around the world, how are you? Hope you're doing absolutely fantastic. So this is a chart of the US dollar, euro, and the currency pair. What we're going to start off with is drawing some support and resistance lines. A support and resistance line are a price point where the currency and or a stock will find more buying pressure and or selling pressure and will cause the stock to either bounce or go down. So what we're going to do is we're going to zoom out and put some time on here, and we're going to change it to a line chart, which makes it a little bit easier sometimes to draw lines. And we're going to start with some resistance prices. Now again, a resistance price, this is where a stock or currency finds more selling pressure. So you can see around 80 cents right there back in 2008, some really strong pressure. And that exact same price came into effect back in 2014. Again, some selling pressure right there. And yes, we've had a few break above it, so we can include these little peaks right there, something like this. And now what we have is some support resistance as well. So here's a support price on the US dollar euro right about here. So let's move it up just a little bit. And what we can also see is some lower highs coming in as well. So we have what's known as a distribution phase. This is also can be, if you know anything about Elliott wave, can be a big wave 4, which a wave 5 is expected to break out bullish. So we're trading sideways, allowing the currency to kind of build some steam and increase its momentum. So notice if we zoom in here again to the daily chart, a little bit closer in now, these are some candlesticks. You can see some of the support resistance prices that we've been bouncing off of. And notice this right around 87 cents we've gotten around here a few times. So what we're going to want to do then in this particular instance is go long 88.8820 and place our stop approximately right about here for a swing trade. And our expectation is that target 1 will be right about here, 0.8990. It's about a 1-to-1 risk-reward ratio. So it's a relatively okay trade. Again, if it can trade up into here a little bit, it's not too bad at all. And you got some lower highs coming in. And our hopes and expectations is that possibly it breaks bullish. Now, at some point, we don't know what direction it's going to break. This particular triangle could break in either direction. So really the best way to get an understanding of what direction it might break is to kind of come over here to a weekly chart and see if there's any moving averages that are kind of propping this up. So we can see the 100, 200 simple moving averages are very far away. So they're not really going to give us much help. Here's the exponential moving averages. And we are hitting the 50 exponential right now. We've bounced off of it once before, so we could easily bounce off of it again. And I would say that this is not a terrible location at all to consider being bullish by any means. If you want to, and oftentimes when you trade Forex, you do go into shorter time frames. And here's an hourly chart, for example. So this hourly chart, now obviously this is hindsight, but I didn't get a chance to check out this chart until today. But let's say I was looking at this chart sometime yesterday. Right. Well, we got the support that I've drawn would have been, right about here, 87 cents, and we'd be able to see this little double bottom pattern. In which case, we could have gone bullish right here, 0.8724, and our stop could have been a little bit more aggressive, right about there, and about 0.8692. So at this point, you would already be up pretty substantial on that particular trade. So oftentimes, depending on the time frame you want to be in the trade, the hourly and the daily are going to be for my swing traders, longer term traders. Maybe you are considering trading while you're at work or something of that nature, so you can get into some trades, go to work, go about your day, and you don't really have to stress about it because you're in a longer term position. If we want to take this trade as a little bit more of an aggressive trade, on the 15-minute chart, we could kind of come in here just a little bit and kind of look at this and say, all right, well, if we are pulling back, this could be a 1, 2, 3, 4, where we're expecting some type of wave 5. So if we're saying to ourselves, all right, well, we're kind of bullish. We would have gone bullish back in here anyway on the hourly chart. Let's just go bullish on this pullback that we're getting right now. That could also be okay. So getting in on the pullback at about 0.8765, placing your stop at 0.8674. That would be your overall risk. And then again, that would make the risk reward a little bit better because now you're getting a little bit earlier. So this would be your risk and this would be your potential reward, which makes it about a 1-to-3 risk reward ratio. And that's what's important in Forex trading or any kind of trading is your risk reward ratio. If you're going to take this trade and your thought process